Hey folks, David Frost, MyStrategicForecast.com. This is another episode in the series of The Lazy Gap Trader. And if you're not familiar, we have a service where each and every morning we send out an email that contains gap trades for the day. They could be scalps, they could be gap fills, they could be any variety of gaps, and I explain it all in an ebook that I provide everybody for free at mystrategicforecast.com/gaps. But what I want to do today is I want to show you today's gap trades. I'm going to show you the email that was sent out to members. I'm going to show you the gap trades, and I'm going to show you what worked and what didn't work. Then you can make your own decision if it's something you want to give a try. So here we go. And by the way, I give the gap trades for 2 weeks for free with no strings attached to anybody that wants to at least just see them on a daily basis. I'll send them to you for 2 weeks. You decide whether you like it or not after the fact. If you don't like it, don't do anything. If you like it, you sign up from there. No big deal. Okay, so here's the email that goes out. This one went out this morning. Again, today does not show a lot of big movers at the open. However, there are a few possibilities. Please keep in mind the levels provided here are mathematical and price may or may not trade to or reach these levels. However, when they do, the probabilities are in your favor. Remember to use stops. And then I list out the plays. We got 5, DISH, SEE, ERIC, FEYE, and CS Credit Suisse. So we got 1, 2, 3, 4, 5, 6, and we have one down here that's 7. This one was given yesterday, and then it was reiterated today because it was coming close to the number. I'm going to talk about that one last, okay, because that was the home run. So 5 networks, 5 below. Let's go over what we gave the members. Resistance is at 38.67 and 41.83, and what that means is if you gap above 38.67, then you have to look for the 41.83, and members know that, and people that have read the ebook know that stuff. And then I say use a 40-cent stop and a 30-cent profit target, which isn't the be-all profit. It's the bare minimum profit. There's other ways to play it so that you maximize the profit. And again, I go over that stuff in the ebook. I give you different strategies on how you can maximize the profit. So let's go over to 5 below and see what happened. So here's a 10-minute chart, and right at the open, this purple line here is up at 30. What was the number? 38.67, and we hit a high this morning of 38.68. Pretty good. 1 penny, right? And then all of a sudden, it continues down immediately, and we hit a low of 37.20, which was good for $1.25, $1.30, something like that. Right at the open. You don't have to catch all of it. You can catch a lot of it. You can catch some of it. What if you had 1,000 shares? What if you had 500 shares? What if you had 2,000 shares? Whatever the case is, you have your stop above the market. You're unemotionally attached to the trade. It either works or it doesn't. And here you got rewarded handsomely. Okay, let's go over to the next one. So what was the next one? Next one on the list was Dish. You know what? Let's go over Ericsson first. ERIC. So ERIC. What we said about Ericsson this morning was resistance at gap window at 11.79 and gap fill at 12.43. That means that if it blew through right at the open, gapped above 11.79, this is where we would have looked, but that didn't happen. Use a 20-cent stop and a 12% profit target, 12-cent profit target, small price stock. You could buy a lot of shares. So here's what happened. So here's your purple line, 11.79 right here. Okay, stock trades up into it within the first hour and a half or so, and we hit a high of 11.81, 2 cents over, and pull back, hit a low of, the low was 11.59. There's your 20 cents. Maybe you got 15, 17 cents, whatever the case is. Could have had a bunch of shares. That one worked out perfectly again. Let's see what else we have on the list. This was all just today, folks. SEE didn't work out. We went over Ericsson. We'll talk about Dish in a second. FireEye, FEYE, did not work, didn't hit the level, and Credit Suisse didn't hit the level. Let's talk about Dish, and then we're going to talk about SWKS. Dish was an interesting one. This happens sometimes, okay? Sometimes we have our stop, and the stock trades through our stop, but reverses anyway. That happened today to me, and I know a lot of members still had it. They didn't have the stop in. I use hard stops when the stock gets there. If it hits my number, I'm out. That's just the way I play it. But I know some people give it more leeway, give them more rope, especially when there's a lot of volatility with buyout rumors. Dish was maybe buying out T-Mobile. Who knows? Nevertheless, the point I want to make here is whether it worked for you or not, the level worked really perfectly. It just overshot a little bit, but then we came right back into it, traded below, and now we're considerably below by about 75 cents. So either way, well, not 75 cents, I'm sorry, 50 cents. And either way, it worked out. The level is accurate. That's the important thing. So let's show you a home run, right? A home run was SWKS. Okay, so we had 4 successful gap trades today, 3 or 4, depending on, how you played them. Now this one, remember, let's go back to the email. SWKS is getting close to the level cited in yesterday's update. For those new members that came on board after yesterday's close, here is a recap of the message. Skyworks Solution is on watch. There is a gap window at 104.06. There's a gap fill at 103.72. That's a mathematical only level at there's a mathematical only level at 104.24. It's not in this part of the email. I cut it off, but then I went on to say that I prefer the 103.72 and blah, blah, blah. What happened? 103.72. What was the low this morning? The low was 103.61. Let's look at a 10-minute chart. Okay. This is a 10-minute chart, pardon me. We ripped higher, and you got as much as $3 out of this move. That's an incredible move, folks. 500 shares, 200 shares, 100 shares, whatever the case was, you got $3 in basically 10, 20, 30, 40, 50, 60, 70, 80, an hour and a half, if you held it that long. Some folks held it that long. What some folks do is they put a break-even stop and ride it as long as they can. There's any number of ways to play it. I go over it in the ebook. If you go over to mystrategicforecast.com/gaps, I give you the ebook for free. All you have to do is sign up. I give you the 2 weeks of the gap trades. You get the exact email you just saw every single day. Okay? Not every day do we have 4 gap plays that work, but I want to show you that the levels work, the price levels work, they're accurate, and you can certainly make money doing this. Gap trading is a business. I put out a video also, which is gap trading as a business. And go over to the website, mystrategicforecast.com/gaps. I show you everything you need to know. And if you go to that page, you'll see a link to the video. And, there's nothing else I can tell you except this is a money-making opportunity. Come over, check it out, and we'll see you on the other side. mystrategicforecast.com/gaps. I'm David Frost. Thanks for tuning in, folks.